I think what they're doing makes a lot of sense. They're prioritizing Asia, wealth, and digital. None of that is controversial. The challenge or the question the market will have is we've been hearing this for the last decade. Ever since Stuart Gulliver became CEO 10, 11 years ago, and even before that with Mike Gagan, HSBC have been talking about pivoting back to Asia, particularly the Pearl River Delta. So it's a story we've heard a lot. It makes a lot of sense. The question now is delivery and execution.
Very, very clear, and thank you for setting the scene in terms of sort of where the risks may lie now for HSBC. I want to pivot, though, to the UK banking sector, because you guys published a really interesting note yesterday on the back of the announcement from Boris Johnson around the plans for reopening the UK economy. What do you think of UK domestic banks here, based on now what we know about the next 6 months? Do you think risks are tilted more to the upside or the downside for UK bank stocks?
We've said for a while now, since like October last year, buy UK domestic banks. We're overweight the UK domestic banks. We think the positives are as follows. Number one, there's a lot of capital return coming. You'll actually get more buybacks and dividends from the domestic banks this year than the traditional divvy pairs like HSBC. Number two, there's actually quite a lot of volume growth. So on the retail side, mortgages have been really strong. And the news yesterday of a sort of slow but reopening of the UK should help in Q2 and particularly in the second half of the year on the consumer side, credit cards, travel, etc. And so a combination of this very strong capital return story and this good vaccine program and the reopening, that makes us constructive on domestic UK banks at the current price level.
Well, Ronit, just to pick up on that, it's Jumana over here. Looking at some of the announcements from these UK domestic banks over the last week, many of them are also pointing to lower loan losses in 2021. And clearly 2020 was a year of provisioning. 2021, they're saying that the actual losses are going to be less bad than they anticipated, which could entail some release of reserves. How much upside does that present, not just for this year, but also for coming years as well, 2022, 2023?
Yeah, there's going to be a big decline in loan loss provisions this year. All the banks, HSBC said it today as well. Lloyds and the other domestic banks said it last week. They're all guiding that this year provisions will more than halve compared to last year. So it's going to be a big step change. For consensus numbers, I think actually 2021 is a bigger delta than probably 2022. Most of us had 2022, 23 normalization. But 21 will be better than people expected a few months back on asset quality. And so it'll be a big jump in profitability. I mean, this morning, HSBC called out, they made a miserable 3% return on tangible equity last year. They want to make 10% medium term. Half of that increase will come from lower loan losses. So it's going to be a very, very important delta for EPS and ROTEs.